Right, just testing mic levels, making sure that the mic's working with all of this new software and hardware. I'm hoping it'll come through on the other monitor. We'll find out shortly. It takes about 15 seconds on YouTube. Well, good evening all. Welcome to Sunday night, Sunday afternoon in my case. I'm going to try and do a video every Sunday, I think, to try and just sort of get an idea of what I expect for the week, take some questions, talk about a few things, and then go on from there. So welcome to everyone, and it's great to have you here. I'll try and do a draw. I don't know if I can do it with this new program, but a new draw for some giveaways for memberships at this YouTube channel. So make sure you're subscribed. If you're not, you can't get into that draw. It's free. And I think I can give away 5 or 10 memberships. But anyway, that aside, let's go and have a look at the charts quickly and go through what we've got. And actually, before I do that, I'm going to go across to my browser, if I can figure this out. And I've got some fancy new transitions here. So let's have a look at this. All right, we've got the browser view now. Just one click of the button. So I want to have a look here. This is my X channel and a couple of things I put up here during the week. Let's just go through some of these, sort of lay the groundwork for the way I'm feeling about everything. Excuse me. If you can hear me loud and clear, please just give me a little indication of that. That would be great. So, excuse me. All right. So a few things that I've sort of looked at. We talked about cocoa during this week, last week actually, and we had that big plunge in cocoa. We also talked about buying Tesla after the hurdles for the Chinese deals were cleared, and Elon met with Xi Jinping, and partnering up with Baidu. We bought, luckily, actually, Tesla right at the bottom. We'll look at all of these charts shortly. Tesla's had a big rally. We're still long on that, but we've taken some profit. In fact, I think we may have taken all of our profit at this point, but and maybe a little pullback on Tesla. But we'll look at all of these charts and then a few things. New Yorker magazine this week talking about AI as being the new boom, funnily enough. And the comment here is, can you go through all the old pitch decks and replace the word crypto with AI? Now, this is New Yorker magazine this week, April the 29th. Last week, rather. Sorry about this hoarse voice. I've been shouting at the dogs because I've been not really shouting, but trying to train them, a little bit of shouting at them. We talked about cocoa, and we've had a look at this in quite a lot of detail over the time. Okay, all sounds good, fantastic. We can have a look at that chart very quickly. It dropped dramatically off the top, as I thought it would. And that hanging man candle, unfortunately, I didn't make the best of that whole trade. I had constraints regarding leverage and sizing and the futures rollovers and liquidity and so on, trying to get in and out of those trades. So we did manage to get into shorts, but I hedged a little early, so a bit of a mix up on that, but no real damage done. But just we could have done better actually on the shorts on cocoa, but there were some problems with that. Copper we've talked about, a bit of a breakout on copper, and I drew a path on that. We'll have a look at the copper chart. I'm just trying to sort of catch up with what I've been talking about during the week. Cocoa, there it goes out of the window. We talked about this, and actually it plunged all the way down into the 6,000 somewhere, 668 I think. We'll have a look at that chart. 3 gaps down we eventually got, and a bit of a move up in the last week or day or two. Perhaps looking for another short on cocoa if you're into that. We'll look at the retracement levels if you want to. Copper, yeah, so basically I think we could get a pullback on copper. We'll have a look at this chart, but just basically a warning that we've had a bit of a rush up here on copper. And if you're looking to buy copper, which I think is a good idea, I think copper's got some legs in it still, but we need to pull back to these moving averages and this support line, the breakout level. Charts mostly pull back to their breakout levels, no matter what you're looking at. We'll look at things like crypto and gold just now as well, heading towards those breakout levels, and that's quite normal. So don't panic about that. It does create some panic, and often those breakout levels, because of the angles of the trend lines, are actually even sort of more dire than you would expect, because if you're buying off a downward trend line bounce, so you break out, bounce off the trend line, in order to pull back down to that trend line, you've got to get lower than the original breakout level to meet the trend line at its descent down. So it's a bit confusing for traders, and it can be a bit off-putting, I suppose, and scary. Natural gas we'll talk about. We've taken our profit on NatGAS. I'm out of natural gas now. $2.15, I'm out. I might want to get back in. We'll have a look at the charts on that. I still want to be buying natural gas into 2.4, but I think we could get a pullback down into the moving averages and perhaps close that rollover gap that we left behind. It's a rollover gap, it's not a price gap, but we've gone up to one of the rollover gaps, the previous one on the way down, and we're at the bottom of that rollover gap, which will now pause the market. Well, it has already done so on Friday, but it will cause a problem with further movements higher, as acts as a resistance level, as does the top of the gap. If we manage to get into the gap and close inside the gap on a daily or 4-hour basis, we should reach the top of the gap, which is around 2.4. So that's what we're looking for on natural gas, but a pullback first. Maybe if it goes up to 2.4 without us, and we're out at 2.15, then we've lost out on that trade. But you know, that's the way it goes sometimes. Bitcoin, we talked a lot about this. We've been buying dips all the way down, down to about 57K, thereabouts. I'm just giving a rough number. Can't remember the exact precise number that we got down to, around about 57. We're back at 63 now, and a big bounce off there. We followed the green path, by the way, not the red one. Although we got halfway down the red path, that's this move down. We'll look at that on the chart as well. So we did get a little down into that area, but not all the way down to the bottom. That would have taken us to 54, but we got to 57, which is halfway down that move. And we've bounced from there. It doesn't mean to say we may well still just, you know, we've reached the sort of channel center line in the shorter term channel. We may actually have to continue down to 54 during this next week or two before the final bounce and the move higher thereafter. I'm not sure if that's going to happen. We're long from 63 incrementally all the way down to 57. So my average price now, I haven't actually calculated, but it's around about 60, perhaps slightly lower than 60, 59.5, maybe something like that. If we get down to 55 and 54, I'll be buying there. I've positioned myself for a very big rally, but multiple entries as we drop down with small positions so that I can minimize my downside risk. And if Bitcoin really does have the legs in it for this next sort of final push to the tops, which I think actually the stock market is beginning to support as a hypothesis, and we'll have a look at that too. I've drawn some lines on the stock markets here as well. So there's Bitcoin. I said we may have to have a smash and grab down to about 50K or even below 50K. And I said that still could happen. But I think that we may have bounced here. We'll have a look at the chart. If it has bounced, it's a wee bit early. I would have expected to wait for another week or maybe 2 weeks before a final bounce as we approach the sort of middle of May towards the second part of May. Jobs, by the way, jobs dropped down a bit. We saw the non-farm payrolls drop down, still a strong number. Anything around above about 200,000, 250,000 in terms of non-farm jobs, still a good number. The unemployment rate ticked up a little bit. the Fed didn't change the interest rates. Jerome Powell, I suppose he was slightly dovish, really. If anything, I don't know, he's playing his cards very close to his chest, but I would imagine that we've got a bit more to go up in the stock market before they cut rates. Now, the rates cut may happen in August or perhaps even later, but as soon as they cut rates, and perhaps just before that, we should see these markets roll over. At the moment, though, we're kind of at a turning point, particularly on S&P and NASDAQ, which we'll see on the charts when we go there. Crude oil, where we've taken profit, I'm out of crude oil. At the bottom of this move down, actually we got down to the 200 period moving average. I think it's going to carry on going down. I'm hoping for another bounce back up again. My target for crude oil is closer to $50 than it is 100. So, and I'm hoping that we're heading down there. Now, here we go, dollar yen. That's another one of great interest. A lot of people have been trading this. I hope you can all hear me still. A little encouragement. If you're not a member of this channel, by the way, there's a join button below. I'd really encourage you to do this. I'm going to try and do more and more for members of this channel and subscribers of this channel, as an addition to those in my private group. There are 3 levels now. There's one, a dollar level. There's a, I think it's a $6.99 level, and so on. And then there's a full membership level, which will give you access to my private group as well. So it'll be all combined. But the cheaper ones, $1, $7, you'll get access to some of my videos early, and also my private members chat area and so on. Not chat area, community area here on YouTube. Anyway, getting back to dollar yen. So that's where we've had this big move down, intervention by the Bank of Japan. We've discussed this in quite a lot of detail in previous videos and in here on X. So, but basically, we're now actually following this path pretty perfectly. We've got down here. We've bounced up a little bit on Friday, almost nothing. I'm hoping, because I've taken some of my short trades off already. I'm sort of in and out, and it's kind of complicated because I've got some longs, some shorts, I'm in and out of hedges. I'm actually hoping overall that this will move down because I'm weighted to the short side. But on the other hand, I wouldn't mind a bit of a pullback. Now, this pullback here, this fractal is drawn from previous moves on the dollar yen. The last time the Bank of Japan intervened, we had exactly the same scenario, and this was the path that formed thereafter. Now, this pullback here is a 50% pullback of the move from the top to the bottom. We could get a 50% retracement. I'm hoping for that. I'd like to add some more shorts on at around about 157, if we could get as high as that. Right now at 154, from 153 and some change. So that's the kind of path. And then the second round of intervention came here, and then probably a third or a fourth, or a third and a fourth a little bit later on. But look how this fractal perfectly touches this channel. This channel and this fractal have got nothing to do with each other. This is previous fractal, previous price move, and this channel is forward-looking. So it's a combination of past price movement and forward-looking technical analysis. And quite funnily and interestingly, they seem to work because we bounce in this predicted scenario from the previous move, which is, you know, it's a prediction. It's not meant to be precise. It's not meant to be accurate. It's meant to be a sort of an idea of what could happen, what has happened before. But it bounces perfectly off the bottom of this channel, completely 2 separate sets of data and studies. So there's the dollar yen drawn in an expanded view, moving downward from there and eventually breaking down through this channel. My target for dollar yen is down around about 135, perhaps maybe 130 even. But that's going to take some time. That entire move, sorry, just going back here, that entire move took, in this example, the previous move from May until August. So the whole of May, whole of June, the whole of July. So about 3 months from now, which would take us into about just mid-May, mid-July, beginning of August. We could see the bottom reached on the dollar yen and move up. Going to be a lot of thrashing around. That part at the top here that I'm talking about now, that's a huge move from the top to the bottom and a big retracement that I think might come. It looks very small in the bigger picture of this chart, but these are massive moves, a big, huge top formation, really, brought about by intervention of the Bank of Japan. 100 years ago, April 1924, Italians gave Mussolini a vote of confidence. Look at them all, giving the Nazi salute. And that was exactly 100 years ago. Interesting. I've got this wonderful book which gives me all the newspaper clippings from the UK going back 100 years, which I'm going to be fascinated by studying. And then NASDAQ. Okay, so I've got scenarios drawn on the NASDAQ. First of all, this is the downward scenario. I've put a new picture up, which I'll show you shortly. We'll go to the charts and have a look at those live as well. This is the one scenario that we turn over more or less where we are right now. There's the 50-day moving average. We touched it yesterday on Friday, so that's not shown here. This was drawn a little prematurely, earlier in the day, before the high on Friday. And then, so we got a little higher, but this is the projection if we fail here. Now, I've got a better chart that I put up yesterday or late last night, and there's one on WTI just showing where we took profit. I'll come to the other NASDAQ chart shortly. There's our entry at the top of the channel, exit at the bottom of the channel. Pretty safe trading, really. It took a while, actually. We didn't get in at that time. We got in earlier, actually. I was hoping for a move up to a little higher on this last move to get some more shorts. We missed out by about 50 cents, getting extra shorts there, which is a pity. But there you go. Natural gas out of longs at 2.15. Next trade might be a short. I put this up on Twitter on the 3rd. It's now the 5th, so that was Friday. So something like this. There's 2.4. That's the 200 period moving average on the day chart, sorry, on natural gas. That's a natural target. It's the top of this gap. We're at the bottom of the gap now. Are we going to get through the gap up to the top of the 200-day moving average at $2.40, or are we going to have to pull back? I think it's 50-50, really. I don't know. I think a pullback into this gap and these moving averages, which are now curling upwards, very good news. I don't think we'll get much below $2 if we do pull back. Maybe 190, 185. If we get down to 185, somewhere into this region, the bottom of the gap, moving averages, that would be great. I don't know if we'll get that far, and possibly we won't even get down. We might gap up over the weekend and get up to the 200 period moving average. I'll certainly be looking to sell at $2.40 to $2.50 for the move down, for at least a retracement. All right, now here's the other chart on NASDAQ, and this is what I was talking about. That's exactly where we are now. We touched the 50-day moving average. Sorry, it's not NASDAQ, this is S&P. NASDAQ's similar, but this is a much clearer picture. And if you're ever in doubt, I think use the S&P as a gauge for the stock market rather than the NASDAQ. The frothy, tech stock heavy NASDAQ is a petulant beast at the best of times, and it's frivolous and fickle, and it doesn't give you always a good idea of what's going on in the market, whereas the S&P, the Standard & Poor's Index, does, and it's a good technically solid chart to watch, and it gives you a very good idea of where the stock markets are going, what the sentiment is. So we've had this dip recently, back up to the slightly downwards sloping, nothing of a channel trend line really, but it is a trend line. Now we're at there now, but more importantly, that's the 50-day moving average. Now the next move, which will be tomorrow or tonight or Tuesday, sometime during this week, there's not a lot of news coming out during the week, except for news from the UK about the UK GDP and interest rate decisions. And are they going to raise interest rates or are they not going to? I don't know. We'll have to find out. But nothing really on the stock market front. So we'll have to find out whether we're going to manage to break up through here on possibly quite thin volume going into May. So we are entering a thinner, slightly thinner volume period. Some people are away, some people are on holiday. Markets traditionally have this sort of sell in May and go away story. It's not always true, of course. But maybe slightly thin markets, an opportunity for these markets to push higher into a thin atmosphere and be met with very little resistance. Once we get above this high here, we should surge up quite nicely. So let's see what we can do. And I think, possibly if we do follow this, we'll follow up this trend line. We could get as high as 5,800. That's an awful long way from where we are now at 5,100. That's 700 points and some. So I think either of these two scenarios are okay. I think it's kind of 50-50. I will decide in the next day or two, maybe even tonight, if this breaks out and holds above this moving average, above this trend line, above the 50-day moving average and the slightly downward sloping trend line, I'll be looking to buy or switch to the long idea or the long concept and bias towards long, and probably take a long trade on dips back to the trend line. Now, if we break out through here, we'll probably dip back down to the green trend line and then take off from there, and that's what I'm looking for. All right. So let's see what happens. We'll have to play this by ear and see how the markets react. Now, there's a little comment here on the mayoral elections in the UK, all going Labour. I didn't watch to the end, but it was going that way strongly. Sadiq Khan is now the mayor of London again for the third term, a record third term, and Britain's, England, UK, whatever you want to call it, is going to have elections in possibly towards the end of this year, maybe next year. But we think that, well, I think we know who's going to win this UK general election. It's probably the Labour Party. It's probably not good news for the pound. And we've also got a surging dollar going on at the moment, which is equally difficult for the pound. So keep that in mind going into the rest of this year in general on the pound. Now, let's go back to Streamlabs and switch to the charts. And let's go to charts view front. Let's see what we've got here. All right, there we go. So isn't this fantastic? I love this software. So we got charts view front. Let's go through very quickly. Now, really what I want to do is just give you my ideas on what's going on generally. And I'm going to start with the dollar index because we're talking about currencies. The only currency that I'm in at the moment is short dollar yen. And I've talked about that briefly just now, but we'll cover that shortly. I'm not going to cover all the other ones, but I will talk about the dollar index because we want to see what's going on with the dollar. And what happened on Friday for dollar bears is not very encouraging. Big spike down to the 50-day moving average on the dollar index. We had a fake break up a few days ago. We've had potentially a fake break down on Friday. We didn't close beneath the channel bottom, which is, I suppose, at least something. If you put this on a 4-hour chart, you'll see better. But on this day chart, it's quite a clean channel. We did close beneath the channel bottom. So that's bearish. We didn't get back inside the channel. But a big spike down to the 50-day moving average looks like the dollar is still undecided and potentially even bullish. That's a reversal candle. Needs to be confirmed, but as it stands, as long as we hold above that low there, the dollar should continue higher. Means lower for the euro, lower for the pound, lower for the Swiss franc, lower for the Canadian dollar, Aussie dollar, New Zealand dollar. All of them should be drifting lower if this dollar manages to hold above the spike at the 50-day moving average at 104.50. Very, very crucial. We'll have a look at the 10-year yield shortly. And I'm going on and on and on. It's now, there's just not much time to do everything in these live streams, but we'll try. Now, going across to dollar yen, well, we talked about this one. There's the intervention. There's the fractal that I talked about. Now, let's see what happened last time. Let's go back all the way to October, I think it was 2022. Exactly the same thing. Precisely the same pattern. An intervention followed by a retracement, which I talked about earlier. Another intervention, retracement, another intervention, I think down here. I'm not too sure about there, but certainly repeated interventions, at least 2, maybe 3 or 4. Now, I've just taken that pattern, exactly what happened there, and I've copied it to where we are today. And that's what it looks like. And we've got down to the bottom here. We get a little bit further, actually, down to the 50-day moving average, which is always a good place for anything to bounce. It's the good division in the medium term between bearish and bullish. Simple 50-day moving average. You can use the 20-day moving average, that's this green one, for shorter term swings, but this is a good one. And if we bounce off it here with a spike like we have done with dollar yen, probably means we're going to have to complete this retracement before the next round of intervention by the Bank of Japan and push it lower. So that's where we are. And I'm constantly adjusting this hedge. I'm looking to get as much as I can on any pullbacks to 157. That's the idea. Maybe even 155, 156, somewhere up there. But if we could get 157, that would be great for a move down to the channel bottom and a path follow of this fractal. Along those lines, not precisely, just a guide. Now going across to NASDAQ, this is what I just put up. We've got NASDAQ and S&P. Let's talk about the S&P. I think I won't cover stock names, individual names, but we have been long Apple and long Tesla, and those have been fantastic trades. And I think very fortunately, I don't claim any sort of special powers, just happened to be that we got some very good numbers coming out of the earnings reports, and we got deals being made by Tesla with Tesla and China and Baidu and that sort of thing. So all of those just got a bump. And then we've still got more to go with Apple, I think, because we've got Apple AI, the new iPhones, the new AirPods coming in soon, and the Apple AI phone, whatever form that will take, will probably be a great seller. And I think Apple's got some good path ahead of it. It's lagged behind in AI, and when it catches up, it'll do it pretty well, I imagine. They got some good hardware and software engineers, so there's no reason to believe that they won't lead the AI phone or AI-enabled phone revolution. Let's reset that price scale. So that's where, oh, I forgot to talk about this. So that's where we are. I put a big question mark. I put this up on X yesterday. That's where we are. If we manage to hold and close above that line, I'll be going long, looking for this path up to the top. that we spoke about earlier, and that's my plan. If we don't hold here and we reject strongly and confirm, I'll be looking for this red path for a short down, and I'm going to have to wait for price action to give me the idea of what's the best possibility or probability or course of action in trading. And that's all we want to do, is look for probabilities. We're never going to get it right every time, but let's look for what the most probable thing is, and that's always revealed by price action. Now, going back to NASDAQ, I did mention that, and kind of same thing. I've got this path drawn on NASDAQ. Oh, we're going to turn around here. I'm allowing for a move slightly higher, actually, to the top of this order block. That would take us up to about 18,000 on NASDAQ, but we're currently at 17.9 and a bit. Are we going to turn around here at the 50-day, just like the S&P, just like the dollar index, all of them at their 50 days? And I don't know what the answer to that is. We'll find out very soon, though, in the next day or two, and I'll be trading accordingly. So we've taken profit on Apple and Tesla on those great trades. NVIDIA, I'm hedged short, and that's where we are, hedged on NASDAQ still. Now, going across to Bitcoin and gold. Gold messed up on Friday. It took some, we spiked down, broke the support on gold. I'm long on gold. We broke down support, and I promptly hedged 60% of my short position, of my long position, with a short position. So we broke down, broke support. I hedged my long position with 60% short position, which I'm holding on to a 60% short position, but 100% long. I don't know what's going to happen here. This is the 200 period moving average on the 4-hour chart. I'm still pretty bullish on gold. If we turn around here, it looks like it's trying to bottom right here. If it is bottoming, I'm going to have to take a loss on the 60%, hold on to the 100% longs, and take it from there. That's where it looks on the day chart. Bit of a consolidation, move down off that all-time high. That's the gold day chart, and consolidating. Looked like we tried to break down through that support yesterday, Friday rather. And well, we did break down through it, but we didn't hold down below it. Big spike up. So down through support, triggered some stops, triggered some hedges, including mine, unfortunately, and bounced up. Not much, but let's see how this plays out, and we'll start trading in a few hours' time tonight. Now, Bitcoin, I'm long, as I said, from all these moves down, these jagged moves down here. This is the 4-hour chart. Let's have a look at the day chart. I'll show you where we've sort of been trading. 63 was my base case. And then as we broke down through there, I added some at 61, I think 60 and a bit. And then the last piece was at about 57. We got all the way down to 56 and a half, actually. So we got a long way down. We got in it. So I think my average price, I'm going to calculate it just now and update my my trading room members. But I think around about 60,000, maybe slightly below that. I don't know which way Bitcoin's going to go, but I do know that on the day chart, we've broken out through the top of the channel now. Another one of these incidences where we broke down through support. Everyone got panicky. Everyone's freaking out about Bitcoin. It's going down. It's all over. We reached the top. And remember, I spoke, we did actually make a new top on Bitcoin and then collapsed back down again. We got above here. We got above the previous all-time high just by a few $1,000s. It sounds ridiculous when you say that now. It's like trading natural gas. When it moves a cent, it's like 5%. But this is the opposite. So a few $1,000s above the all-time high, and then it collapsed back down again. A pretty bearish rolling over pattern until Friday, and then and the weekend, and it's carried on. There's Saturday, Sunday we're on now. This is live. This is from Coinbase. My broker's not open over the weekend at Black Bull for Bitcoin even, but Coinbase is ticking, and mine will gap into wherever Coinbase is a little bit later on tonight. But so we a fake breakdown through support, but we're back up through the top of the channel now, but into this big red order block. And the 50-day moving average is there on Bitcoin. We've broken above the 20. We've held above the 20. That's this green line. So all good there. I'm hoping that this will carry on moving up and starting to build quite a nice position. We could put some more, and I suppose, on a new high and add to the positions on strength rather than on weakness. Copper we spoke about. Really, this is what I think we could get. I think long on copper generally, but we may have to pull back down to the swing low and the 20-day moving average at about 4.5, or we may need to get down to 4.3, which is probably where the 50-day moving average will be at that point. But generally bullish and continued move up. Maybe not as aggressive as it's been, because it's been quite aggressive, and a bit like uranium, it's probably going to have to consolidate for a while. And talking about uranium, and I don't know where uranium's gone. Used to be here. Oh, here it is on this chart. All right, so that's it. Gold and Bitcoin, long on both of those. Nothing's really changed except Bitcoin's gone ballistic, which is really good news. US 10-year yield, everyone thought this was collapsing. Probably still is. We want this US 10-year yield to come down so that we can see our Bitcoin gold, stocks, a dollar coming off, euro and the pound and other currencies gaining a little bit against the dollar. So we want to see the 10-year yield come off. It looks like it's broken down through this 20-day moving average. We need 2 days below the 20-day. So we've got one so far. Maybe that one's a fractionally below it. Possibly, you could say there was 2 days. I think it's just 1 day. And yeah, but we haven't closed beneath that low there. And we had a bit of a bounce back on Friday. I think it still looks bearish though. And I think that's going to keep moving down, which will be good for everything, including Bitcoin and gold and stocks. So that's that. Nothing else to talk about on there. And then uranium, and so you've got URA, UEC, these two uranium instruments, long on both those, nice big rallies towards the end of the week. That's going to crumble upwards or melt up, crumble up, melt up, nice new words. And then Brent crude oil, well, we got out of this. Actually, we're trading WTI, not Brent crude. But both really, so at the 100-period moving average on WTI and the channel bottom, that's the only reason I got out. I'm hoping for this path, a little bit of a bounce. This has moved premature to my drawn-in path, which I drew in a week or two ago. So it's a little premature. So it's a price magnet, this support level, Fibonacci level, channel bottom, a price magnet, because we've had a big rush to it. Price magnets often have quite a strong bounce off them in the opposite direction. Sometimes like a reverse polarity. So we should see this bounce up. I'm hoping it will, because if it goes down without us, I've lost out on the next move down. But maybe we'll just get down to this green line where the arrow is and then bounce up. So we'll either bounce here probably and give us another chance to sell, or we'll get down there and have another chance to maybe buy even at the bottom there and then exit and then resell, something like that. We'll see how this plays out. I don't know. We'll just follow the price action. It's been pretty easy so far on WTI because we've been given some really clear candle signals on which way this is likely to have gone. We had all these reversal candles at the top and then inside the channel, big spikes up and down, and we've been short all the time, so it's been great. Natural gas, on the other hand, I've just got out of, and at 213 the price is now. I got out at 215. Actually, it was, yeah, well, precisely at the top actually. Funnily, I'm not sure if it's going to stop here though. This is a 4-hour chart. We're above all the moving averages on the 4-hour and inside the steep channel. Now we've got up to this level. We have to switch to the day chart. I think natural gas below $2 remains cheap. That is my general philosophy and hypothesis. Every time we get down below $2, I've been buying, and you know, this is a whole year's worth here, up this year to date. And you know, every time we've got to the bottom, we've been buying. But now it's a bit more difficult because we're actually at the top of the move, and that's why I've got out. I haven't sold just yet. Doesn't mean we can't go up to the 200-day moving average at 240, maybe 245. It doesn't mean we're not going to stop here at the bottom of this gap and the 100-day moving average and move down from here. But something like this, one of these two paths, and for the moment I've got nothing on this, so I'm going to wait and see what happens when the market opens up later on today and decide what to do. So that's natural gas. So for the first time in quite a long time, I've had no position on natural gas, but I will be getting back into that, either selling a little higher up or buying a little lower down. Really, that's it. Until we get towards the rollover, when I'll have to get out as contango approaches and those effects begin to build into other parts of this trade and panic starts to set in towards every rollover. All right, so that's it, folks. Now, what I want to do is take some questions. We've been going in, well, it's only half an hour actually. Oh, it feels like an hour. Let me read some of the questions. Okay, there's a question from Till on cocoa. So let's have a look at the cocoa chart while it's fresh in my mind. And let's swap this chart for cocoa. So my general idea on cocoa is that we'll probably get a pullback, a bit of a bounce, and then more opportunity to sell. But let's have a look here. You can choose any of these. I normally choose my broker's cocoa chart, but they're all pretty much the same, slight pricing differences. But let's go for the ICIAS CC futures contract, and that's where we are at the moment. So remember, these moves are between 5, 10, 15, up to 20% per day. So unless you're trading with very small amounts and hoping for very big moves, you're subjecting yourself to incredible danger, as a lot of people found out over this last month or 2 or 3, including myself. Incredibly difficult to trade, almost impossible. And this big move up, this vertical move up on cocoa was literally that, just completely vertical. And now we've got to come back down. We've already come all the way back down to here. And this is the 100-day moving average, this black line. We'll have a look at it more focused. But at some stage, we've got to get right back down into more sensible levels. And that's around about maybe the new levels, 5,000 or 5.5. But it was about 3,000, $2,500, $3,000 per ton. Now, if we get down to 5,000, it'll seem cheap. We got to 12,000. So, but how far can we pull back? I mean, how far can we bounce before we drop? Well, always, I'm going to take the breakout level. Remember what I said to you earlier, let's draw those trend lines in. And in fact, I need to get my black bull broker up, but I haven't got time for that now. But let's just roughly draw these trend lines in, and I'll give you an idea. So there's our first breakout level of that trend line. Then there was another trend line here that we broke out of, another much steeper one, which I spoke about frequently. So let's just change the color of that to red. So we've got two trend lines. We've broken out of this one. We never pulled back to that. It's too steep. You're never going to get all the way back up there unless it was going to retry for a new top, which it didn't. So we broke down. We got to the next one. We got down below that, down below the 50-period moving average. And now the next place for a reasonable retracement and rebound, and I can say this really confidently, is back to the trend line, which will take us higher, note this, than where we broke out of the trend line. This is what I was talking about earlier. When you break down through a rising trend line and retrace back to that trend line, you have to retrace higher than the breakout point, which is up here. Now, what's good about this is that this other green line, this 20-day moving average, this one here, is curling down and will meet this line at the same time that the price gets there, if it does get there. So what I can do is just draw this little circle on here, which is what I like to do. I like to put little pictures on my charts so we can imagine where this will meet up. It'll be 2 days' time, somewhere here, and something like that. And then what I can do is draw myself in an imaginary path. And I do this all the time because it helps to visualize. It really does. Particularly if you like to recognize patterns. I'm very much a pattern trader. So many of my trading ideas come from patterns, not only candle patterns, but chart patterns, psychological chart patterns, things that reflect the market, things that have occurred time and time again in the past that I've seen personally over 23 years of trading. So that's why I like to draw pictures on my charts, because it starts to help me visualize what I've seen before and what could happen in the future. So I'm going to draw this line like that. So I still think cocoa's bearish. We've got to get down to about $5,000 a ton. We're currently at 8,000 thereabouts. So we want to be going down on this, but we want to be going down from the top. So let's check this out and we'll get where we want to go. Well, the first target is this swing low, obviously. That's all the way down here. All right. Now that could be something like that, a very steep bounce from here. Damn it. A very steep bounce back to the trend line and then a slower move down. I think that's my favorite idea for cocoa, and that would take us up to the trend line and the 20-day moving average meeting at 9751. I'm going to call it 9,800 because I like 800s and 200s. So 9,800 for a short on cocoa if you can afford a surge up to this previous high at 11,800. So 9,800, your stop loss has to be, or your hedge, above 11,800, or a daily close above this trend line and above the 20-day moving average. One of those two. It's really important that you understand that if you're going to be trading cocoa. Okay, I think I've said as much as I need to say on that, and good luck. Very dangerous, but you can manage it if you can size yourself properly. I was unable to size because cocoa futures contracts are indivisible, and I had some smaller accounts linked to my managed accounts where they could either just be one contract or no contracts. They couldn't be 0.1 or 0.5 or 0.7. It had to be one or nothing, and it would allocate those contracts too big in size to those accounts, making it impossible to trade safely because of risk and leverage. It was not leveraged, but not leveraged at all actually, but just massive swings. 15% swing on a day with any sort of position, even if it's unleveraged, is a potentially 15% swing in your account. That's crazy. At the best, if it's unleveraged. And but if you can manage that and reduce the size and get it down to like a 1.5% loss on your account if it goes against you, and a 10% gain on the other side, that makes more sense. So it depends on what instrument you're trading and where you're trading it and what your rollover deals are, whether it's a continuous contract or a futures contract. Contract rolls over every 2 months, so it gives you a little bit more time. You don't suffer from the contango and decay that you do on natural gas. And so it's easier to trade from that perspective, but not when the market is cornered, goes ballistic, and a lot of wealthy people in West Africa are cheering the price going higher and higher day and night. Right. I'm thinking of a good vibe. Okay, I don't know how to get these questions up on the screen. I used to know how to do it. Let's just switch view here. Let's go. I've got my daughter's dog here. Please excuse the news. Switch view. Tell me what you think, guys, in the chat. What do you think of this iPhone view and being able to switch between? I think it's pretty cool. I kind of like it. It makes it slightly less formal and more interactive and slightly more homely. El Professor says, hi James, what places do you recommend for trading in South Africa? I'm thinking of a good vibe. Jeffreys Bay. Try Jeffreys Bay if you like surfing. Cape Town. Lots of coastal places. I wouldn't recommend Johannesburg at all. Good morning, Adam, and good morning, Shift Horse, and Brad, and Till, everyone else here. Not very many people there, actually, only about 48. It's a Sunday afternoon. But what I'm going to do is leave this up as a recording so that if anyone wants to see what we're thinking, please ask any questions right now. We've got about 5 or 10 minutes for questions. I'd really appreciate them. If you don't have any questions, I'm going to end the stream and we can all go our merry ways. But please ask if you've got any trades that you're in, anything that you're concerned about, anything you don't understand, anything you want guidance on, any suggestions that you've got, any ideas, any good trade ideas, let us all hear. What I'm going to be doing is, I'm trying this software out, and once I've got it all pat, which it's sort of almost there, I'm going to do a lot more streaming stuff, whether it's through X or on my private channel or on YouTube. I'm trying to figure out a way to get all of this into one place so that the members over on X in my private group on X, the members at YouTube here, where we are at the moment, and the members over at my private group can all have access to the parts of the resources that they need, but in sort of one place. But we need, proper software for it. This is a good start. This is good streaming software. And then we'll move on there to getting this hub set up. And I'm working with a few people, and I've got some help this weekend from someone, a young guy who's really good technically and who's involved in the sound and music industry, and he knows his way around software like this pretty well. Okay, yes, euro yen, same as dollar yen, for sure. I think with the euro yen, really, mostly these follow the same path as the dollar yen, the yen pairs. And if I have a look at the euro yen, let's look at the day chart. It's a very similar sort of picture. I haven't drawn a fractal on the euro yen, but if the dollar yen retraces 50%, the euro yen should retrace 50%. Otherwise, it could carry on going down if the dollar yen does, and there's every chance of that. Now, I'll just show you why. This is the euro yen. If we retrace 50%, we'll get back up to 168, thereabouts, or 167.80, okay? Call it 168. Maybe 169, maybe the 618 fib. If we retrace, and actually I think 169 is a really good place if you could get that high to sell euro yen. However, we may not even get that high. I'm hoping we do, because I'd like to get some shorts up there. But if we draw this trend line on the euro yen, it all looks a bit like it's going to just collapse, really, which is not what I want, even though I think it's going down. I prefer it to move up again to get some new short positions up here. If this breaks down, and this is a day chart on the euro yen, if it breaks down and closes beneath this channel line, I'm going to have to short it. Perhaps add shorts on a breakdown and a close, but I'd much prefer to add on the higher up break, on the bounce, on the rally retracement to the breakout level, very similar to the dollar yen. And actually I could draw a channel in here which will illustrate it slightly better. And please ask me any technical questions if you've got any as well. It doesn't have to be about a specific currency, any trading related questions, charting questions. So there's a channel on the, that's a pretty neat channel actually, right there. So we're also trading in a channel here on the euro yen, but really not managing to bounce off the bottom much, unlike that. So that's, you know, hopefully we'll bounce and get a chance to sell up here. Maybe we won't, but I think the dollar yen looks more hopeful. Although look at the 4-hour chart. So let me just go back to euro yen. 4-hour chart on the euro yen is turning around. There's the 200 period moving average on the euro yen, 100, 50 and 20. But there's the 200. We're below it, which is bearish, but holding that channel and trying to sort of round a bottom out here. So, but no, not very strong. Probably moving down. I think there's a 50% chance that we go straight down from here, or we retrace back up to get some higher opportunities to sell. And very similar to the dollar yen, you know, in the way it looks. Just to remind you, this is the dollar yen, and that would be a 50% retracement of this move. We've actually moved quite a long way, a lot further down than the last interference and intervention by the Bank of Japan, which makes it slightly more bearish. Even though we've got a big spike, the momentum on this initial attempt to drive the market down was more than the previous attempt, which means that there's probably slightly less support for this currency after so long being so high and so much at stake for the Japanese. I think it's time for a pullback, and I think we could be in for a nice strong move down. A couple of thousand pips sounds like a lot, but 2,000 pips when you're starting at 160 yen to the dollar is not as much as it sounds. It's only actually worth about 1,200 or 300 pips on a normal currency pair. All right, so that's that. And so euro yen, yes, probably the same as dollar yen, but allowing for retracements. And then palladium and cotton. Walter asked about cotton and Ant asked about palladium. I haven't looked at those recently. Ant and Walter, I tell you what, I'll try and not do that in this stream, but if you're on X, or leave a comment below this video once it's uploaded in the comment section, just to remind me. I'll try and see if I can get to those shortly, but let me just go through some of this other stuff. El Professor, Jeffreys Bay and Cape St. Francis are your favorites. Do I trade futures? Yes, I do trade futures, El Professor, and I live very, very close to Jeffreys Bay, and I've spent a lot of time surfing at both Jeffreys Bay and Cape St. Francis, Seal Point. Best break in the world, best right-hand point break in the world. Super tubes at Jeffreys. What can I say? Any good books about market psychology? That's from Klang Shellen Meditation and Trauma Serum. Meditation and Trauma Counselor, something like that. I think trading psychology. Now, there is a book, to be honest, I have not paid much attention to myself, but lots of people have read it and lots of people love it. So I'm going to go on general crowd consensus. And the book is called Trading in the Zone by Mark Douglas. And I've skimmed through it. I can't say I've actually even paid for it. I've skimmed through someone else's copy. It's pretty good. Psychology is everything in trading. And if you can master your psychology and recognize and observe patterns on your charts and be stable and calm about everything whilst you're doing it, you should be okay. But psychology is everything. So Trading in the Zone by Mark Douglas. But if you go onto Amazon, there'll be lots of recommendations. If you put that book in, Trading in the Zone, Mark Douglas, and then also have a look at some of the other recommendations. There may be people in here or on X who can give you better advice. That's a very old book. There might be newer ones. There are a lot of, I'll tell you what, actually, even better than that, my personal opinion is to get all of the Market Wizards books by Jack Schwager. They're not about trading psychology, but they will tell you how traders live and think, other traders, successful traders, the best ones in the world. And he's got 3 or 4 books now. It's called The Market Wizards, The New Market Wizards, Stock Market Wizards, and another one. And each book has a number of chapters on the lives and philosophy and psychology of the best traders in the world. For me, that's better reading than Mark Douglas trading in the zone, but others will have different opinions on that, and you can let me know what you think. All right, so Palladium, let's look at Palladium while we're here. I may as well carry on until the end of this section, this hour section, half an hour, which gives me 12 minutes. Let's look at Palladium. Please put any questions up if you've got any. There are 32 people watching. What are your positions for next week? What are you hoping in your trades? What trades are you in? What do you think? What are you struggling with? What trades are you trapped in? What trades are you hoping to do well? If you've got any questions about any of that, it would be great. Otherwise, don't worry. It's not that important. Now, we're looking for metals. Did I get rid of my metals? No. All right, let's have a look at, let's put it here, Palladium. I can't trade Palladium at Black Bull, so I can trade it at Oanda though. So I'm going to use the Oanda chart for Palladium, and let's have a look. Now, generally, I'm not a fan of Palladium. As you'll know, I've got some videos up on it. I said when we were up here at about 2,000 that we'd probably get down to 500. Well, so far we've got down close enough. There's my line, that green one there. So we've stopped here. I've had these lines drawn in for about 2 years now, or at least a year, maybe 18 months. So the first line we got to, we held above it briefly. That was about 1,200. Held above it for about a month or so, and then collapsed. Retraced, tested it from underneath, and collapsed. New low. Back up again. Couldn't make a newer high. Double top. Collapsed. And so that's where we are at the moment. Doesn't look great. This is the week chart. Okay, so look where we've come. We've just not managed to do anything. We're still below all these moving averages. So that was the first one. Now, and we got, yeah, so we got to the second green line here, and then we formed this piercing pattern, engulfing candle, bounce off there, not for long though, double top, back down again. That's where we are now. Now we've got another, so we could make a double bottom here at 830. It's possible. I don't see anything to say that this is looking anything apart from bearish. Maybe we've got support here. We've only closed beneath there 2 weeks once when we had that big reversal. So this is a good support level, actually at 950. It's a really solid level. In fact, I could put another, let's just draw another line in there and put it in there. So that's a good level, and you can see why, because we only closed beneath it once, 1 week, since November last year, November 2023. We only had 1 weekly close beneath this level. So if you're going to have a go at going long on Palladium, now's the right time. But you better have a stop loss plan in place or a hedge if we close beneath there. Now, the next line below us is the one that we already touched, 844. And then we've got 530. That's what I originally set as a target a couple of years ago. And I still think we're heading down towards that level. Let's have a look at it on the day chart, see if there's any sort of shorter term action going on. Day chart, what can I say? Yeah, not great. I mean, we closed beneath that level on a day chart. We're into the support level, downward trend. We're below all the moving averages. We're still making on the day chart lower highs and lower lows. I don't like it, and I think demand for Palladium is just not. I mean, are we going to be using Palladium very much in the future? Is there a demand for it apart from in catalytic converters for combustion engines? I don't know. I know there are uses for it, but that's the main use. Are there going to be any catalytic converters required in the future? I have no idea. I don't know. I think probably a combustion engine is never going away completely, but it may go away on the whole in general, at least for a while. All right. All right, so some more questions. I'm going to try and get these questions on the screen in the next stream. I don't know. Maybe there's a way to do it. Someone. No, I don't think so. No. Looking for natural gas, maybe a sell at the top of the gap. Okay, so that's Klangshalan. It's at 2.4. Looking to sell at 2.4. Someone's just commented. What do you think of US oil? Why do I think US oil might go lower? I just don't think there's going to be, I think there'll be short-term demand for it now going into the driving season and summer, perhaps a little bit of a bounce. but I think it's in the nature of oil that the prices are, and oil and politics and power, that prices they can't be at $100 a barrel. They need to be at 50 or 60 or 70, probably closer to 60 or 50. And I think that the administration in the US will work hard at keeping oil prices low. And I think that probably the next election will release the drilling in the US, the results of the next election. I think there's going to be plenty of oil around, possibly. That's my hypothesis at the moment. But I think it's got to be, no matter what, I think it's got to come down. I mean, we've got an inflation problem, and the Fed's involved with dealing with that, with the government and the Democrats and the Republicans have all got interests in oil being at lower prices, particularly right now, the Democrats, of course. Right. Yeah, so maybe a bit of a blip, like I said earlier, into the summer on oil. Let's go back to that chart and see where we are. Let's go to Brent. We can look at Brent crude or WTI, same sort of thing. This is not Brent crude, that's cocoa. So there's your cocoa chart, everyone. I hope you enjoy that. If you want to have a go at 9,800. But WTI, quickly going back here. So yeah, are we going to get a bit of a bounce into the driving season? Let's have a look at what happened last May. Let's have a look at over the last couple of years. I mean, we know that there's a greater demand, or perceived demand. Here's the beginning of May last year, 2023, beginning of May. We started May at $68, $70 a barrel on WTI, and we ended May at the same price. Ended June at the same price, actually. Only in August did we see that summer rally. So let's see what happens. So maybe we won't get that blip now. We probably have to wait a month or two, maybe. So let's have a look at 2022 and the beginning of May. Yeah, so this is a bit of an early rally in May. So we went from, well, this is $99 up to 120, and that was in May, and then the big move down. That's where we were selling, actually, right up there, 120. And then let's just have a look at one more. There's the beginning of May. There's the beginning of, hang on, where's the beginning of May? April, May. So this is 2021. Beginning of May, we started at at $65. This is 2021. And at the end of May, we're at the same price, $65. So don't expect a huge, big, massive bump up during May. We may get it. We got it earlier, one of those years we had a look at prior to that, but we may not, and we may just carry on dribbling downwards. I don't know. But I think we are heading down, and I think down to the 50s and 60s. So that's my opinion. I could be wrong, of course. All right, quite a lot of questions. I can't get to them. We've got 4 minutes left. I'm sorry about that. If you want to get questions and get them in early on these live streams, I'm going to try and do one every Sunday, at least aim for that. So try and get your questions at the beginning of the stream, because otherwise you run out of time. Now all the questions are coming in. I haven't got time to answer them. Perhaps take a look at Lufthansa and see what you think about the upcoming. I don't want to look at Lufthansa Klangschalen, unfortunately. I haven't got time for that here. I don't trade European stocks anyway, unless it's traded elsewhere. I don't know. All right, now last thing, just to finish off, quickly I want to change the view here. So let's go to browser, iPhone view. Oh, there we go. And then there was one more thing I wanted to point out here. Oh no, okay, we've talked about that. All right, and that's it, guys and girls and ladies and gentlemen. Copper we talked about. I just want to make sure there's, in the last 2-3 minutes, make sure there's nothing I've missed out here. There's the euro yen. We did turn at that channel top, actually pushed up through it. We've seen a lot of channel breaks out through the top on almost everything so far. There was that dollar yen at 158.20. We got up to 160, breaking out through that channel and collapsing back down. Same with the euro yen. We've seen it on gold. We've seen it on uranium. We've seen it on oil. We've seen it on all sorts of things, dollar yen. So it's just super interesting. And there was cocoa at the top. And that's where I said we should be considering to sell cocoa, right there. And that's exactly was the top. And I picked it. I didn't trade it well. We got in short, but I had longs and I was hedging short, long, short, short, long, long. And the only reason for that was because basically on the way that the sizing was structured on the smaller accounts, it was too risky. So yeah, so even someone who's been trading for a long time can get into a state when there's too much risk on a trade. And it's a very good lesson, by the way. If you are in a trade that makes you nervous and makes it difficult to sleep at night and makes it difficult to make rational, proper trading decisions, your size is too big. It's as simple as that. It means nothing more than that. There is only one conclusion: you've got too much on the trade, and it happens all too often with traders with very small accounts trying to make a quick buck, and you could blow your $1,000 account in a few seconds. People do it all the time. Some of my members try and do that and have done that, and they've written to me and said, "Look, this is what I've done. What can I do?" And we've got to talk about risk and sizing and that sort of thing. But when you're trading things like natural gas and cocoa, really any futures, it could be oil futures, it could be sugar futures, whatever it might be. Talking about sugar, let's have a look. We've talked about cocoa. Any of the futures are tricky to trade because you've got rollovers and you've got thin markets. Market liquidity goes up and down all the time. And sometimes in thin markets, things just go ballistic and very difficult to trade. So if you're trading futures, and natural gas and cocoa are two really good examples because they move huge amounts, and you're trading with a small account with high leverage, your chance of survival are very, very small. Just don't do it. Just don't do it. It's not worth it. Rather build up your small account bit by bit. Try and get 5-10% a month, even 2 or 3 or 5% a month, or even 1 or 2 or 3% a month, and build up your account. Add extra cash in there. Don't over leverage. If you've got $500 and let's say you've got a small trading account of $5,000 or $1,000, let's call it $1,000, and you manage to scrape together $100. Put it then in your trading account. Then that's 10%. And you got 1,100, and you make 10% profit that month. Now you got 1,200. You put another $50 in the next month. Now you're up to and bit by bit. By that, before you know, you're at $3,000, and then $5,000, and let it compound. Add your spare cash in there. Trade slowly. Trade wisely. Pick proper trades. Learn how to trade. Don't gamble. So if you're going to pick a trade, take a trade. Take a proper trade. Calculate your risk. So if I lose this trade, assume you're going to lose the trade. If you lose the trade, how much are you going to lose? Is it 10%? Is it 1%? Is it 20%? Is it all your account? And decide whether you're willing to lose all of that. Depends on your circumstances and what your goals are, your risk and your goals. But just don't do it. If you want to be a trader and you want to do this for the long term, and long term means 5 years, 10 years, 20 years. I'm at 23 now, believe it or not. I know I look like I'm 30 years old, but I've been at it a long time. So now we're going to look at sugar very quickly, and I think we'll end up with this. So I often look at sugar at FXCM. I mean, I've got different brokers. Or Oanda. I mean, I trade at Oanda and I trade at Black Bull. And Oanda is a fantastic trading platform. It's one of my favorites. Now, sugar, clearly not bullish, and just heading down. Now, let's look at the weekly chart, because this is an interesting one. We've been selling. So our trades on sugar have all been short. We've sold at the top here. We sold over here. We haven't been in this. This is going back to January. I think our last trade was actually in December last year, somewhere down here where we got out of the shorts. And I haven't been in sugar since then. Basically, and in fact, it's my own consequence, my own fault, because I missed this trade. And I saw it a few days later, it was already down here, and I missed that entry. And possibly missed another one here, but I would have preferred that one. We're now down into support. There's the 200-day moving average. Here's this order block. There goes my daughter's dog. There's another one just below it. I don't think this is the strongest support, even though it's the 200-day moving average. And that's a dog. Sorry about that. My daughter's dog. It's a stray. Not a stray, it's a rescue. So I don't think this is the strongest support. I wouldn't mind having a go here, though, at 17 cents. Let's just get this. I don't know what exactly. Let's change this. Let's give this another decimal. So down here we're at 90. So we're at 196 now. So I think we could get down into like 175, I think 180 actually. 180 is probably the best area. I like that. The top of this order block, 180 or 18 cents. Okay, that's what I think on sugar. So definitely not bullish. We've got a hanging man candle here on the weekly, but if you look on the daily chart, I'd prefer to see more evidence of that down here. I don't see any. I see an up and a down, maybe two potential. I don't know. I think if you want to get into sugar at this price at just under 19.8, 19.5, you could do so. But bear in mind that this may have to move against you then another little bit down to the next order block, which is on the weekly chart. On the daily chart, it's here. We're right at it. And that one I drew in myself, actually. This one is something I drew in. But on the weekly chart, we're right at that as well. So one of these two blocks, I prefer the bottom one. So make sure that if you get in now, you have to allow either stop it out or hold it and add to that position, or hedge it and add to the long side at the bottom there. I wish this dog would stop barking. And that's it, folks. Sorry about the dog. Hopefully this noise cancelling microphone will prevent you hearing it all the time. It's annoying me at least. All right. Okay, folks, I think that's it. And I'm going to end now. It's been an hour. So I've done my hour live stream. I'll try and do them on every Sunday, but stay tuned. Please, if you haven't subscribed to the channel, I'd really appreciate your subscription. It's going to help me to get this thing going and offer more value. I'll try and do as much as I can for free, so as you know already. So, but your subscription really helps because it helps to support this channel. I buy the software I've just bought. You know, I pay for all sorts of things to make these things possible. It's not cheap. It's not expensive, but it's not cheap. And I use the money from the subscriptions on this channel, which you don't pay for. YouTube pays me for the views, and that covers all my subscriptions and a little bit for some hardware. Like today, I had to buy a new splitter for the USB device, which was 2,000 rands, which is $100, just like that, for a little bit of plastic or metal with some plastic around it. So that's it, folks. Have a great trading week ahead of you. And like I said, please subscribe if you haven't done so. It helps. And there's a join button underneath this video, and you can join this channel and get early stuff and invites and members perks. You can read all about that. It starts at $1. It also helps the channel grow and supports all the stuff that I do. So that's it. Take care. I'll speak to you soon.